Alright, hope everyone's doing well. So, alright, I only traded the Forex yesterday. Today's Saturday, so I'm speaking in reference to Friday's price action. So, real quick, I'll just share some of my thoughts. My apologies if I whisper, it's early in the day, so I'm trying not to wake everyone. And I just kind of woke up recently, so anyways, here's the euro dollar, and as you can see, just from over here, start with the daily chart, spike and channel, tried to bottom, we're going above the December high on the 30th, big tails, lots of dojis, lots of sideways movement. The bears had a chance, reversal, and they really couldn't get it. They did not get a good reversal. 5-minute chart, or we'll go to 60. 60-minute chart, spike and channel, forming broader now, probably sideways into a trading range. But look to the left. It's been a trading range. 5-minute chart. We channeled up, but the channel was weak. And let's see if bears are making money. Okay, so bears are making money above bars. And then we got that report bar at 7:30, and if you look at it, big bar, but it's climactic. Look at a 1-minute chart. One moment here. There we go. So outside down, bad follow through, and another sell off. It's basically a parabolic wedge. And then we get this, bull bar, another bull bar, another bull bar. At some point it's a reversal. And, if traders were quick, they'd get out and then look to sell again, maybe over here somewhere. But again, I'm not condoning, watching a 1-minute chart. The reason I brought that up was that, very often when you get a huge breakout bar, 50-50 chance you get bad follow through in an opening reversal, especially when the bar is this big. It's who's left to sell. I'll go back to that 1-minute chart. Look at every 1-minute bar. This bar right here is 3 ticks tall. This bar right here is 10 ticks tall. This bar right here is 30 ticks on a 1-minute chart. So, huge sell-off and then more down. At some point, traders, all the strong bears who sold are looking to sell a pullback, and all the bulls who bought, the weak bulls who panicked, plenty of bulls got out during this bar, which was the right thing to do. And then weak bulls to an extent. And then you had weak bulls who they got out. Strong bulls kept buying, and even bought more, probably built that bar. We're down here. So strong bears are flat, and weak bulls are out of the trade. So that leaves strong bulls still long and weak bears in the market. So since there's weak bears, what that means is these bears will sell, put their stop up here, and they'll say, okay, I'll sell a 50% pullback. Well, those weak bears will, at some point, they panic. They sell, they're selling, and you get a reversal, and they say, oh my gosh, I got to get out. And they panic and they buy back their shorts, which causes a strong reversal up. So where I'm getting at is no one's left to actually sell. And sure, you can make up a reason to sell, but it's just like it's in general, it's what makes an exhaustion bar. The strong bears already sold. They want to sell up here because they know it's climactic. The strong bulls, they bought and they'll keep buying and they'll buy all the way down here. It doesn't matter, and they're going to keep buying. Hence, they're strong bulls. Weak bears are selling, but they will mismanage the trade, or they'll get out. They won't use the stop up here. They won't scale in up here. Personally, I would get out. I'd get out above that bar. If I was short, I'd get out above and just sell again. Too much risk of an opening reversal. But so yeah, I hope that makes sense. Comment below if it doesn't, and I'll further explain it. But this right here, changed the character of the day. Big down, big up. It's a doji. Big doji bar, trading range price action. So that means that most likely, the bears knew they'd get a second leg down, as did the bulls. What they didn't know was, will this be a strong trend or a leg in the trading range? Well, this bar told traders that right here is probably a trading range. So what do they do in a trading range? They'll buy and buy more lower and buy more lower. Or the smarter bulls, quote unquote, but I guarantee you plenty of bulls bought here and then they waited for a bull bar. Maybe some bought here as well and then bought more here. But either way, it's not a coincidence that traders buy here, buy more here, and that's their average entry. It's a reasonable buy if you manage it correctly. So this told traders it's going to be a trading range. Smart bulls did not buy here. If anything, they probably sold. And they waited, here. Did they buy here? Probably not. Tight enough channel. Probably going to let traders out here and fall below here. But then after this, it's parabolic kind of sell off. It's weak. A lot of bulls started buying in here, betting we'd get up to here and up to here. Obvious targets, this high and this high. This was also a reasonable buy. And that kind of set the tone for the day. Another one I looked up was the dollar yen, USD yen. And, same thing. Bull breakout, bad follow through. 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 And real quick, I want to talk about signal bars. Good signal bars reverse something. This is a pretty decent setup. And if I find the right chart, better. That's pretty decent. What I'm getting at is it's a decent setup because it's breaking out to the upside and reversing. So it's actually reversing something. Reversal bars, good signal bars, and stop entries actually reverse something. Like for instance here, we're going up, and reversing. I'm not going to explain that in too much detail because you can go to videos, candlesticks, and I believe it's called, it's like video 8, the 1000 course, and it's very helpful. But anyways, big signal bar, confusing, really big, bad follow through. That's a warning right there that this is probably like in trading range. So spike, channel, one push, second push, third push. And you can call it parabolic, So bear breakout, but not that strong. Probably better to look to buy a pullback. And then here, this was the bears giving up. So I'm sorry, the bull's giving up. And then you have to be open to the possibility of some sort of, test at the bottom of the channel, maybe leg 1, leg 2. It doesn't really matter how you draw it. In any case, strong breakout, probably going lower, another strong breakout, probably minor reversal, then we channel down until, and this is another thing, people talk about breakouts of channels. Well, you have to think about why, what's the logic? There's a logic behind everything. So, why does a bear break out of a channel normally fail? Well, let's look at it. 15-minute chart. This is a tight bear channel. At some point, price breaks below it and reverses up, so it's a signal. Kind of like right here. Breaks below, turns up. So it's a buy signal. Kind of like over here. Bear channel, clearly we broke below it and we're turning up. So it's a sign that price is failing down here and it's better to look to buy. And again, context is everything. You have to say I actually really like the Forex markets. I'm testing out FXCM right now. Took me a few days to kind of learn the platform, which really wasn't that bad as I thought it'd be. But I like it. I really like the whole. There's U.S. Open, and you have Asia, then you have Europe and the U.S. So it's really nice to be able to trade all the time. But and that's another thing. One thing I'm working on is I want to get more into longer time frames. So for example, maybe trade the euro dollar. In the during the U.S. Open, and here look for, I don't know, the Aussie dollar, look for a longer term trade. Maybe buying here on a 6-minute chart, buy somewhere in here, go for a measured move up. But I like it because it's very reliable, and that's something that Al does a lot. It's reliable, and it's you can easily trade whatever position size you want. So anyways, that's about all the time I have. I'll look at the Emini real quick as well. I didn't even really watch the Emini today, and in part just because I wanted to trade Forex, and because to get more used to this platform, and second, I saw it doing this and kind of really didn't care that much for it. So, let's see on the 60-minute, trying to break above these highs, micro channel trend line break to a new high. So probably trading range soon inside of a larger trading range. Weekly chart, inside bar, but forming it's just a 4 or 5 bar type trading range. We'll probably get down to here at some point. We broke above this high, closed the gap, broke above here, probably to close the gap. Monthly chart, trying to get, still about half a month to go, but probably going to be a bear bar. More tight trading range. That's pretty much it. Crude oil. Have not looked at crude oil. Limit order market, strong sell off. 60-minute chart, spike channel, but big down, big up. Spike pullback channel, evolving into a trading range. Really not a lot to say about it. Big down, big up. and then tight trading range. Daily chart, more of a tight trading range. As it goes up, bears sell. As it goes down, bulls buy. Weekly chart, more tight trading range. And then, monthly chart, I think overall, I think we're going to get back up to here. I don't know how long that takes, but the reason I say that, number one, is sideways for 5 years, however many years. Okay, it's about 5 years. And I can get rid of this. This was an obvious low, which makes me think that two things. Measure move down, we're very close to it, so we may have to get to it. Measure move this trading range. This was a reasonable place to buy, so if a trader buys this low, scales in, they'll probably make money. Strong breakout, probably a little bit more down, but then you get a breakout, bad follow through. Bear breakout, bad follow through, close the gaps. So we're starting to close gaps. I think we'll test up to here and here, but I think we have to form a bottom of a trading range. So it's kind of a trending trading range. Breakout, trading range, breakout, possibly another trading range, and then a close, a move back up into here. But that could be many, many years. Bonds. Strong bear breakout, bad follow through, probably at least a second leg down, but making a deep pullback. Broad channel. But I think the catch for the bull channel is over, and I think we're going lower. Down to here, somewhere. But again, we may have to, we could even get a new high before we get an actual, bigger reversal. All right, that's all the time I have. Thanks.